Yes. Oh, did it become official?
Maybe not.
I bet not.
Yeah, I would be too.
You know, she mentioned that she wanted to speak on some stuff that looks like she is. It looks like the leadership guys are probably at the meeting.
Okay, all right.
Sarah Crowley.
Okay. Well, we have enough for a quorum. I mean,
Another one of
That's just, that's the only thing I can think of.
things that
Okay,
groups
okay.
about what our
it makes sense.
messaging is. I'm more nuts. We had one that I went to the budget committee and heard the same stuff all over again.
Are you worried about Mangle? Wrangle.
He's up in New York.
I know.
Whenever you, I mean, we have a quorum.
Okay.
I don't know who was waiting for.
I think we'll get started. Okay.
Stroke came off the road too.
Good morning. The committee will come to order. We're meeting this morning to consider two different bills within the committee's jurisdiction. We will consider each bill individually with a separate opening statement and walkthrough for each. The first order of business is a bill introduced by Ms. Black and Mr. Davis to consolidate certain tax benefits for educational expenses into a permanent reformed American Opportunity Tax Credit, also known as the AOTC. Ms. Black, you're now recognized for an opening statement on the bill.
Thank you, Mr. Chairman, and thank you for giving me the opportunity to speak here today on this important piece of legislation for both students and their families. And I also want to thank you for all the work that you've done on behalf of the taxpayers across this country. It is a well-known fact that the cost of education is climbing. And for far too many, the ability to save and pay for college without ending up under a mountain of debt is simply out of reach. Today's broken tax code does little to ease that financial burden or to provide a sense of security that education will be a reality for the future of many young people. That's why, when working with my colleague, Mr. Davis, as the chair and co-chair of the Education Tax Reform Working Group last year, frustration with the code was a common theme we heard. As a matter of fact, we had the opportunity to hear from a variety of educational groups across the spectrum, and the feedback was consistent. Fix the complicated tax code. We learned that there are currently 15 different tax breaks for education. 4 are designed to help individuals save prior to becoming a student. 9 are available while the student is in school, and 2 exist for when the student has completed his or her education. It was overwhelming when we had tax experts explain it, so it was not difficult to imagine how parents trying to navigate the 90 pages of the IRS instructions would simply toss up their hands and say, I give up. The work that Mr. Davis and I did during our time together on this working group didn't end when we delivered our report to our colleagues. Instead, our desire to provide at least some relief from the frustration led the two of us to work to see how we could clean up the code and help families struggling to finance education costs. That process led to introducing a bill, H.R. 3393, the Student and Family Tax Simplification Act. What this legislation does is it consolidates 4 existing education provisions. The HOPE credit, the American Opportunity Tax Credit, are also known as AOTC, the Lifetime Learning Credit, and the tuition deduction into a single, modernized, strengthened AOTC. Streamlining the number of education provisions and retooling those that are the most effective allows us to simplify the code and reduce some of the confusion that exists today. And as a result, students can spend less time figuring out how to finance the cost of higher education and more time developing the skills they need to succeed in a knowledge-based economy. I think we can all agree that it ought to be easier for any family to plan, save, and invest in education. And our bipartisan bill makes common sense reforms to make the tax code simpler and fairer when it comes to helping Americans afford the cost of college education. So again, I thank the chairman for bringing this important bipartisan bill to the committee for markup, and I look forward to advancing this common sense bill to help families and students. And Mr. Chairman, I would like to request unanimous consent to insert 5 different letters from colleges in my district in my state of Tennessee supporting this bill. Thank you. Now
Well,
you're
thank
back.
you. Without objection, so ordered. Mr. Levin, you're now recognized for an opening statement.
Thank you, Mr. Chairman. In February, you unveiled a Republican tax reform proposal that was hailed as comprehensive, trimming the tax code by 25% without adding anything to the deficit within the first 10 years. In a matter of just 4 months since then, Republicans have moved in ways that both dramatically contradict the draft tax reform package and threaten the programs that matter to American families. The proposals Republicans have brought forward in recent months, including the 2 provisions today, which selectively and permanently expand the tax code without a single offset, adding $825 billion to the deficit. That results from just 14 tax revisions. Imagine what the total will be when Republicans get through work on the entire tax code. The hypocrisy of the Republican fiscal irresponsibility is simply stunning. It was barely more than 2 months ago that Republicans argued that the Ryan Republican budget, which they claimed would balance the budget in 10 years, was the fiscal medicine this nation needed. Our colleague, Congressman Brady, said at the time, and I quote, that Americans have had it with Washington's fiscal irresponsibility, end of quotes. And Chairman Ryan said that we cannot, in quote, continue spending way beyond our means. What Republicans continue to do today is not only ignore their own lofty rhetoric, but also their own budget, which required that any tax cuts be offset. Instead, they continued to drive their runaway tax train into a deficit ditch so deep that when all is said and done, taxpayers will be on the hook for more than $1 trillion in additional debt. The $825 billion in tax spending that Republicans will have approved out of the committee after today represents more than 1.5 times what we spent last year on all non-defense domestic discretionary spending, which has been slashed by Republicans to its lowest level on record as a percentage of GDP. That includes spending for such vital domestic priorities as health research, food safety, and veterans health care. Already that spending is on pace to fall below 2% of GDP within the next decade. When Republicans eventually come hunting for cuts to rein in a debt that they are voting to add an additional $200 billion today, we know where they will turn. Nowhere in the Republican piecemeal plan to expand the tax code and the deficit has there been any discussion of key priorities, such as making permanent the expansions of the Earned Income Tax Credit for working families, the new markets tax credit to revitalize low-income neighborhoods, the Work Opportunity Tax Credit to promote middle-income job growth, and the renewable energy tax credits. In fact, while proposing today to make permanent the American Opportunity Tax Credit, which expires in 2017, Republicans expose a key concern that the 2017 expiration of the expansions to the refundable portion of the child tax credit will not be addressed in the piecemeal approach Republicans are pursuing. It's safe to say that the Republican tax reform train has derailed and that the collateral damage is everywhere. And when it comes to the 2 specific bills here before us this morning, as we have discussion on them, you will have further questions and comments from members on the Democratic side. I yield back.
The committee will now proceed to consideration of H.R. 3393. Without objection, the bill will be considered as read and open for amendment at any point. I offer an amendment in the nature of a substitute, which was distributed in advance along with a green sheet explaining it. And without objection, the amendment in the nature of a substitute shall be considered as read, open for amendment at any point, and considered base text for purpose of amendment. I will now turn to Mr. Tom Barthold, Chief of Staff to the Joint Committee on Taxation, to provide the technical description of the amendment in the nature of a substitute, and I would ask that members hold their questions until after his presentation.
Thank you, Mr. Chairman, Mr. Levin. The members have before them Joint Committee documents JCX 71, which describes the underlying bill H.R. 3393, and the green sheet JCX 73, which describes the chairman's amendment in the nature of a substitute. I'll briefly review the highlights of the bill as amended by the chairman's amendment in the nature of a substitute. As modified, the legislation would provide a tax credit for qualifying educational expenses of up to a maximum of $2,500, of which $1,500 could be refundable. These amounts would be indexed for future inflation. It modifies the phase-out ranges for taxpayers who may be qualified to claim this, such that all taxpayers are eligible if they're joint filers up to a modified adjusted gross income of $160,000, other taxpayers $80,000, and these modified adjusted gross income thresholds also are indexed for inflation after 2018. The bill would provide a coordination rule with Pell Grants, making it more possible for the Pell to be both fully excludable and for a taxpayer to also potentially claim the American Opportunity Tax Credit by counting Pell Grants first against non-tuition expenses. In addition, the modification would clarify reporting requirements of educational institutions, requiring that they only report to the taxpayer and the IRS the aggregate amount of tuition received. The provisions would be effective after this year. It would make all these provisions part of permanent law. There would be no expiration date. The document also provides my colleagues' estimate of the budgetary effects of the proposed legislation. Happy to answer any questions the members might have.
All right, thank you. Are there any questions for Mr. Barthold? Mr. Davis.
Thank you very much, Mr. Chairman, and I want to thank Mr. Barthold again for being here. Mr. Barthold, during the process of discussion with stakeholders concerned about education, both conservative and progressive education organizations and groups told us that the current education tax benefits were poorly targeted to the lowest income families. Given your expertise in this area, could you discuss that notion or that concept that they expressed?
Mr. Davis, tax benefits are often difficult to target to very low income individuals because very low income individuals do not have any tax liability. So it's easiest to target a tax benefit where you can reduce taxes. So the issue that I think you heard from a number of commentators was the extent to which tax benefits that are provided under the code may be refundable. Of current code benefits, the American Opportunity Tax Credit is refundable. The modification before you would increase the amount of refundability. Other tax benefits, such as those Ms. Black mentioned in her opening remarks, such as the deductibility of interest for student loans or the lifetime learning credit, the tuition tax deduction, those are not refundable benefits. Deductions per se can't be refundable.
The community colleges, and I have a large number in my congressional district and around the area. They've long talked about the difficulty of coordinating between the AOTC and the Pell Grant, that better coordination would provide greater opportunities for individuals to make use of these reliefs that exist. Could you discuss that a bit?
Yes, Mr. Davis. As I briefly noted, the chairman's amendment in the nature of substitute and your underlying legislation try to change potential coordination with Pell Grants. As you know, Pell Grants are grants to individuals based on income, generally low income, and there can be an issue with the taxation of the amounts of the Pell Grant. Generally, a tuition scholarship is excludable under the code, but if there are grants for aid for living expenses, that can create includable income. Your legislation before you today would make the entire Pell Grant excludable. So to the extent that, let's say, tuition was $4,000 and there was a grant for $5,000 in part to cover living expenses, the entire $5,000 would be excludable. On the coordination issue, if a Pell Grant were used first for tuition, then the student would be remitting less than full tuition to the educational institution, since the tuition is the primary basis for the credit that the taxpayer may claim for the American Opportunity Credit. If you've reduced tuition, then you can only use the credit on the excess. The legislation before you permits essentially Pell Grants to be counted first against non-tuition expenses to maximize the amount of tuition that the taxpayer would then pay, which would then maximize the amount of additional credit that the taxpayer might claim.
Thank you very much. Thank you, Mr. Chairman. I yield back.
Thank you. I just want to say I thought that was a very good explanation of the reforms in the Pell Grant area. And just to clarify something Mr. Davis asked, the $1,500 refundability under the AOTC is certainly a larger benefit for low-income students than current law, is it not?
Oh, yes, yes. I noted that it's an increase from current law where the maximum refundability is $1,000. And so the legislation before you today would increase refundability to $1,500. And again, those amounts are indexed. The American Opportunity Credit under present law is a non-indexed amount.
And because, thank you. Mr. Doggett, and then I have Mr. McDermott.
Mr. Chairman, first, before I ask a question, just a clarification on procedure. I have some documents to introduce and would like to be heard against the bill at the appropriate time. Will I have that opportunity if I use this time just to ask Mr. Barthold a couple of questions, or should I proceed now?
I mean, this is primarily a time for question. You will be recognized again in the amendment process, even if it necessarily isn't an amendment. You can.
I can speak about the bill.
So I think this is really
Very
this
good.
particular time is just to ask about the bill, but then I'll go back to you.
Thank you very much. Mr. Barthold, you will recall that in one of our working group sessions concerning Mr. Camp's draft bill that included Ms. Black's provision, I raised concern about how much harm would be done, how many students would be cut, how much money would be cut from student financial assistance. And I received a response from you yesterday. As I read it, the original proposal, now modified, and I want to ask you about the modification too, but the original proposal advanced by Ms. Black and Mr. Camp would have eliminated about 5 million people next year from obtaining the benefits of this act.
Mr. Doggett, you're referring to a letter that we provided to you and all the committee members.
Yes.
Yesterday afternoon.
That's right. On the eve of this hearing.
And your question
and
is
my
what?
question
I'm
is,
sorry.
as introduced, if this bill were approved as proposed by Ms. Black and Mr. Camp, 5 million fewer students would be able to qualify to obtain assistance next year.
That's in making the comparisons. I think it is important to keep in mind that the question that you raised and what we tried to answer in the material that we provided yesterday is the education credits within the entire Tax Reform Act of 2014 as proposed.
Yes, sir,
by Mr.
and I appreciate it. And I want
So
to
there's a lot of other changes going on, but in terms of just the table, for the other members that may not have the letter before them, we had reported that the number of returns that we were projecting under present law for calendar year 2015 who would be claiming education credits was approximately 16.4 million returns, and under the Tax Reform Act, as the discussion draft as presented by Chairman Camp, we estimate approximately 11.4 million returns. So yes, the difference is about 5 million returns.
Yes, all that aside, the bottom line is 5 million students who get the benefits of the current tax provisions to encourage education will lose out if the bill had been adopted as originally proposed, right?
Yeah. If you'd permit me to qualify, I think it may be important to look at where.
Well, I'm glad for you to do that at a
happens,
later
but yes.
time, and I certainly want to accord you more respect than the last witness that sat in your chair. But the other thing that you've got in the document is that there's a total of $4 billion fewer tax credits, $4 billion less in student financial assistance that would have been provided under that bill. Is that right?
The credit amount,
4.44
claims
to be precise.
approximately $4 billion less.
Now, with reference to the changes that have been made since what I believe was a very unfortunate original proposal with substantial cuts to students at a time that student debt is soaring and students need more, not less assistance, the piece of legislation as it is proposed for the first time this morning continues to impose limits on those poor working students. For example, a single mom who has a child to take care of and is trying to work and go to school, if they take more than 4 years to complete their education, in this legislation, even as revised, the lifetime learning credit, it's been totally repealed, and that single mom will lose the benefits of that lifetime learning credit. Is that not correct?
That's correct.
And
an individual can claim the lifetime learning credit after they claim either the HOPE or the American Opportunity.
And since I was a member of the working group committee that Ms. Black headed, you know that one of the groups that we heard from on that committee was the American Council on Education, representing most of the colleges and universities in the country, and you recognize that they continue to oppose, they oppose very strongly the huge cut that was originally proposed, but they continue to oppose the substitute that is presented to us today, do they not?
Actually, I haven't received any correspondence from these organizations.
And have had no contact with them?
Well, we talked to them about technical issues, but we routinely don't receive their position papers if they make a statement of position on legislation. So I'm not aware of that, Mr. Dog.
Thank you, Mr. Chairman. I'll hold the rest of my
Would you like to submit your papers now? Record, that'd be fine.
I'm glad to do so. The American Council on Education offered a letter yesterday and referenced a letter that they had forwarded concerning the original document. The American Council on Education includes the American Association of State Colleges and Universities, the Association of American Universities, the Association of Governing Boards of Universities, the Association of Jesuit Colleges, the Association of Public and Land Grant Colleges, the College and University Professional Association, the Council for Christian Colleges and Universities, the Council of Graduate Schools, the Hispanic Association of Colleges and Universities, and the National Association of Independent Colleges and Universities. And I would ask that their letters opposing the legislation of June the 24th, and I believe the earlier one was April 4th, ask unanimous consent that they may be made part of the record.
Without objection, so ordered.
And I will hold the rest of my comments for appropriate time. Thank you, Mr. Barthold.
Mr. Barthold, the analysis contained in your letter, just to clarify, is based on the discussion draft, is it not?
Yes, Mr. Chairman. It includes all the parts of the discussion draft, but the particular table then isolates and says what's the individual kind of incremental effect of the education credits.
And the bill before us today is, particularly in the income phase-out area, different than the discussion draft.
That's correct.
And can you describe for the committee how the bill before us is different than the discussion draft with regard to income phase-outs?
It increases the income phase-out for married joint returns. And then, as noted, it also indexes those amounts.
And to what level?
The phase-out for a joint return would begin at $160,000, and I believe under the discussion draft, it was 130. Discussion draft phase-out for joint. No, but the discussion draft. Let, yeah, but 40 for joint. It was $86,000 was the beginning point of the phase out of the discussion draft. So it nearly doubles the income level at which taxpayers are eligible to claim a full American Opportunity Tax Credit.
All right, thank you. Mr. McDermott.
Thank you, Mr. Chairman. Mr. Barthold, is there a payment mechanism for the money that will be spent in this, included in the bill?
Mr. McDermott, the legislation before you only modifies and generally expands the American Opportunity Credit and the coordination with the Pell Grants.
So the answer is no. There's no way to pay for it.
There are no separate revenue-raising provisions.
Thank you. Well, as a doctor and a state legislator and a member of Congress, I've been fighting for legislation to improve kids' lives for 40 years. But today I'm going to vote no on this Student and Family Tax Simplification Act, and I'll be voting no on the Child Tax Credit Improvement Act. Why? Because what the Republicans are doing here today is just another going home with a press release exercise. It's shameful because it really exposes the hypocrisy of what we've had around here. Republicans have shouted into the wind for months about adding to the national debt and about saddling our children and our grandchildren with the burden of government spending. Yet the inescapable fact about today's markup is this: these two bills, making these tax provisions permanent, is just spending by another name. Now, you can confuse the American people about appropriations as spending, and this tax credit stuff is something else. Well, it is spending by another name. It's just another instance of taking out the national credit card. We've got to call this the American Express Committee. Hypocritical Republicans are simply unwilling to find ways to pay for making these tax provisions permanent. These two additional bills, along with the other bills already passed by the committee, will add $825 billion to the debt. In the face of that much more debt, the bottom line is this: if you want a more robust and more equitable child tax credit, then you have to find a way to pay for it. If you want to change the educational tax credits, you've got to pay for it. Over the past few months, this committee has made permanent tax provisions that favor business. Now we come to two bills that would simplify the educational tax credits and create a more robust and equitable child tax credit. Because these bills deal with children and education, crucial issues that Democrats have cared a lot about and have done a lot about, most of these were created under the Democrats, Republicans expect Democrats to simply go along with the plan to run up the debt. Well, we're not going to go along. We'll stand firm on the idea that these tax provisions need to be paid for. Outside of this realm, in this room of Republican hypocrisy, in the real world, you pay for something you want now, cash up front, or you go into debt and pay for it later. The more debt you rack up, the more money you have to pay servicing the debt, and the less money you have for other expenses. American families sit around their kitchen tables. I've heard this discussed before when they were yelling and screaming about building up the national debt. The American families do sit around and understand the real world economics. Republicans clearly don't understand them, or they don't want to understand them, or they want to confuse the American people. Republicans seem content to offer American families a propaganda campaign that says very simply, we can have everything we want in life, and we don't have to pay for it. Now, I want everyone in this hearing room to understand something. Democrats are willing to find ways to pay for government spending, whether that spending makes tax provisions permanent or pays for schools or funds critical for education. I hope at some point our Republican colleagues come to their senses and stop the hypocrisy. However, I don't see it happening today. Let's be clear about what we're voting on with these two bills. Adding $825 billion to the national debt and sticking our grandchildren with the bill. 30 years from now, your grandchildren, my own granddaughter, she's 10, she'll be 40 years old. She'll be paying this debt when I'm long gone. All because the Republicans lack the vision and the values to make choices that strengthen our nation rather than cripple its future generations. And that's hypocrisy and real failed leadership at its very finest. I yield back the balance of my time.
Mr. Ryan is recognized.
Hypocrisy, it's an interesting word. If I have the PAYGO law in front of me here, and it's very clear, and I know a lot of the folks on the other side of the aisle voted for the PAYGO, statutory PAYGO in 2010. Putting aside our opinion of PAYGO and how we would like to replace it with CUTGO, the child tax credit and the education tax benefits, such as those that are dealt with here in the Black-Davis bill, are exempt from PAYGO. So the very law that seems to be defending here, it's in black and white, very clear, the child tax credit policies and the education tax benefits are exempt from the PAYGO baseline. So Black-Davis conforms with PAYGO already as we have it. And the thinking, I believe, at the time, as I participated in this debate over statutory PAYGO through the Budget Committee, was that these benefits, which are in law, which are intended to be permanent, shall be considered permanent for the purpose of the PAYGO baseline. So this conforms to the law written by the Democrats in 2010 anyway. So let's be consistent here. And I think what we're trying to say is we shouldn't be raising taxes on hardworking families to keep and improve the education tax benefit system and the child tax credit. And I think the wisdom of PAYGO at the time was to reflect that, and that is why this is exempt from PAYGO. I yield.
All right, Mr. Lewis.
Mr. Chairman, I would like to yield my 5 minutes to Mr. Doggett.
Thank you, Mr. Lewis. The American Opportunity Tax Credit is an important provision. It is in the law today because of its inclusion in the Economic Recovery Act of 2009. I worked with joint tax with groups like the American Council on Education, since it was not in the original draft of the Economic Recovery Act, to have it added. And with considerable effort, we were able to get the existing law provisions in the American Opportunity Tax Credit included in the Economic Recovery Act. One of the provisions that I added to the law at that time was refundability, because I think it's extremely important that we have a refundable element so that some of our most economically disadvantaged neighbors who might not have had as much tax liability as there was tax credit under the Act were included. We have been able to defend that refundability concept against repeated Republican opposition, and I'm very pleased to see them endorse the concept today. Indeed, the American Opportunity Tax Credit Act, when it was originally before this committee and before the Congress, every Republican member of this committee who was here at that time voted against it. So it is encouraging today to see more commitment to this legislation than we have ever had prior to today. It is also extremely important that the bill as originally introduced, which would have eliminated student financial assistance through this act to about 5 million students, and would have reduced the amount of total student financial assistance through this act by over $4 billion, almost $5 billion, that those provisions have been altered. That's a significant improvement and a significant gain to have more bipartisan support. The need to make continued improvement in the Act, which was expanded in its life to 2017 under subsequent legislation, is embodied in legislation that I've introduced along with over 100 colleagues to extend the American Opportunity Tax Credit. It certainly needs to be paid for, and there are many corporate loopholes that could be closed to do that, but I believe the approach in that legislation is a better approach than that before us today. Now, the American Council on Education is someone I consulted then and someone I've consulted at each step along the way of trying to make improvements in the Act, coordinate it better with Pell Grants, and that's because that council incorporates, as I mentioned earlier, our Hispanic colleges, our Christian colleges, our land-grant colleges, our Jesuit colleges, a wide range of educational institutions that have experience with student financial assistance. And one of the lines from their April 4th committee expressing grave concern about the original piece of legislation Mr. Camp and Ms. Black introduced made a very important point that has not yet been raised this morning. The federal tax code is no substitute for the Pell Grant, federal work study, and other federal student aid programs, and that is provided through colleges and universities. The reason that point is so important goes right to what Mr. McDermott was saying. Because if you demand, in order to get this, $600 billion in business tax cuts, which have already been approved out of this committee in the Congress, and you're going to add on up over $1 trillion in total money borrowed from the Chinese, you will continue to squeeze out these other vital student financial assistance programs like Pell Grants, and it's already happening under the Ryan budget to begin to put the squeeze on the programs that many students rely on. It's not solely the tax credit that helps get them through college. But there are additional reasons that have been raised, and that is the fact that the legislation ignores the realities of the modern college and university, particularly the community college. So many of our students are not folks that just graduated from high school. They're folks that went into the workforce and realized how important it was to upgrade their skills. They're folks who may have families, folks that may have already started a job and want to be able to keep that job, in fact, must keep that job in order to be able to go to college. And that's one of the reasons that the lifetime learning credit, which this legislation as substituted today totally eliminates, repeals, with no good reason advanced. It is saying to those folks that we're not going to support their efforts to upgrade their skills. And that's why yesterday, the same American College on Education said, even with the substitute version, the bill would negatively impact many low and middle income students who benefit under current law. Thank you, Mr. Chairman. I oppose the bill.
Thank you. Time has expired. I know the gentleman keeps talking about the discussion draft, but I hope that the gentleman is aware that the income phase-outs were doubled in the Black-Davis legislation before us today. But I wanted to ask Mr. Barthold, the Joint Committee released a document last Friday on education tax benefits in anticipation of a Senate finance hearing yesterday, and that document stated that observers note that certain individual tax benefits for education provide incentives for educational institutions to capture some of the benefit by increasing tuition and fees. In fact, if colleges raise tuition in response to a federal non-refundable credit, students or parents without federal tax liability to offset are unambiguously made worse off by the credit. That's end quote. Could you explain this line of reasoning a little more? And are you saying that the lifetime learning credit and the tuition deduction might actually make many low and middle income students and their families worse off, and therefore that repealing it might make them better off?
Some analysts have questioned when benefits are created, be they spending programs or be they tax programs, what's the economic incidence? While we will statutorily say that the taxpayer may claim this, in the market, it could be the case that prices increase. And so the point that was being raised for members to consider was if there in fact is a change in tuition or fees from institutions, an increase because they recognize that there are federal subsidies available, then individuals who are not eligible for those subsidies lose, because tuition goes up, they have no subsidy. Someone who has the subsidy, tuition may go up. If it does not go up as much as the subsidy, they're made better off by the subsidy. That's a long answer to your question, but in the particular case of the lifetime learning credit or certain other benefits, if the existence of these have created have led to some increases in tuition, those not eligible to claim lifetime learning credit, generally lower income people, in a number of cases, as was pointed out earlier, they would be made worse off by the tuition increase.
All right. Thank you. Mr. Kind and then Mr. Neal.
Thank you, Mr. Chairman. Mr. Barthold, under the American Opportunity Tax Credit, my understanding of the amendment that's being offered, it's proposing a significant administrative change, which is hiding in the bill. Currently, schools can report either eligible tuition charges billed to students or paid by students. This amendment eliminates the billed reporting option to schools. I've heard from many of our universities back in Wisconsin about this provision. Could you explain to the committee the significance of that?
The credit itself is based on expenses actually incurred by the taxpayer. So I assume that in making the modification, that the chairman is trying to align what's reported to the taxpayer and to then the IRS reflects the basis upon which the credit itself is calculated.
Well, it's my understanding, listening to the universities, that students are going to get caught in kind of no man's land in the transition of billed or paid, the distinction there, and this is where it gets complicated. But they also express concern about the impact on graduate students. You know, how many graduate students would be affected by the streamlining of education credits? Do you have any calculation as far as the impact on graduate students with the streamlining requirement under the bill?
I do not have available for the committee data on the number of students who would be considered post-baccalaureate.
Well, Mr. Barth, I'm asking these questions not to play gotcha today, but to make a point. You know, this is a significant change as far as the affordability of higher education, Mr. Chairman. We have not had one hearing, not one hearing in this committee about this legislation. And there's some complicated things that are taking place now in what's being proposed that's going to have an impact on undergraduates and graduate students alone. And I think it's one of the reasons why we need to slow down a little bit and make sure that we're getting the policy right. Now, many of us are supportive of the consolidation behind this policy with this legislation, but there are complex implications involved that I think this committee needs to explore more in depth, given the preliminary feedback that we're getting from our universities today. Mr. Barthel, could you just tell us what the budgetary impact is of the American Opportunity Tax Credit bill before this committee today?
As reported on the second page of JCX 73, we estimate the 10-year budgetary effect at a revenue loss of $96.5 billion.
And what about the child tax credit before us today?
We reported that value on the it's also on it's on JCX 74, the middle of the page. We report an estimated revenue loss over the budget period of $114.9 billion.
So all told of the two bills, $210 billion, but no proposed offsets or pay-fors to pay for these two tax measures. Is that correct?
That's the yes, that's correct. That's the legislation.
Do you know what the total cost of the previous 8 bills that have been reported out of this committee?
I do not have that before me, and I'd also.
Well, if I said about $615 billion, would that sound approximately right to you?
It sounds about right, but let me caution the members that there's probably some interaction between some of the provisions, particularly some of the capital cost and accounting provisions.
Well, just talking roughly then, between those previous 8 and the 2 before us today, we're up to $825 billion budgetary impact with these 10 bills now being reported out of the committee, with no offsets, with no pay-fors whatsoever. But let's also be honest here today, Mr. Chairman. There will be a pay-for this legislation being reported out of the committee on a permanent basis. It will either come in the form of reduced spending in certain programs in the future, or increased revenue in the future, or increased borrowing from China in the future to pay for these bills. And I think it would be appropriate if our Republican colleagues would be honest with the American people today on what pay-for they're going to pursue for these bills being reported out of the committee. Will it entail spending cuts, and if so, in what categories, so the American people know that, or any revenue increase or future borrowing from China? And of these 10 bills now, of $825 billion, it roughly approximates 2/3 of the 2001 Bush tax cuts in real dollar terms, in dollar-for-dollar terms. Adjusted for inflation, it's approximately equal to the 2001 Bush tax cuts. Have we learned nothing in recent history here on how we drive this nation deeper into debt by proposing legislation with no pay-fors and no offsets? So I think we need to be a little bit more candid with the American people today. I yield back.
I just want to remind members of the committee that this is a bipartisan bill that is a result of a bipartisan working group that met for months. Is there anyone on the committee who does not know what this legislation does? So this has been a very open discussion, and also the bipartisan working group, Mr. Black and Ms. Davis, reported to this committee in a meeting the findings of their work. And let me just say that the administration's budget does not offset the cost of making the child tax credit and AOTC permanent. So the administration makes these provisions permanent in their budget. And also, again, as Mr. Ryan pointed out, these are exempt from PAYGO. So I think if we're being candid, we should really look at what the reality is surrounding these two provisions. And Mr. Neal, you've sought recognition.
Thank you, Mr. Chairman.
Mr.
In the
Neal.
spirit of that bipartisanship that you've offered here, might I suggest that the procedure that you've employed today, acknowledging that your draft and tax reform was a good start in the process, there's an opportunity here to take up an expanded earned income tax credit that cracks down on fraud but expands the opportunity for those who legitimately need it, and honoring the principle of going to work every day. Having one of the better parts of the tax reform discussion was the opportunity to hear from people as to what the problems are with earned income tax credit procedures. It has little to do with the recipients and much to do with the tax preparers. So I think that the initiative you've offered today might give us a chance in a bipartisan spirit to take up the whole notion of what to do to reshape an expanded earned income tax credit.
Mr. Levin. Mr. Thompson.
I'd like to yield my time to Mr. McDermott.
Mr. Chairman, I think bipartisanship's an interesting thing. We've had a lot of meetings in this room where the public was excluded. Those don't count. That's not the legislative process. Working groups that work behind closed doors somewhere are not the legislative process. The regular order is when you call a committee hearing and gavel us in, and we go off an agenda where it's out in the public and everybody can see it. Now, Mr. Ryan is, I know, an extraordinarily capable person around the budget, and he refuted that, or suggested that the PAYGO rules exempted what we're doing here today. But the fact is that the 2010 PAYGO rules only exempted an extension of AOTC in its current form. In its current form, and not the cost of improving it or expanding it or anything else. More importantly, that exemption was only in effect for the legislation considered through the end of 2011. Those are the specifics. And if you would have an open hearing, you could have this kind of debate so that you wouldn't be left with the impression that what the Republicans are doing is perfectly all right. Spending outside the limits is okay.
Will the
It is
gentleman yield?
not okay.
Will the gentleman yield?
Yes.
Okay, so I'll just read from the PAGO law, which was written at the time those policies existed as they existed, not foreseeing perhaps changes. Under the subcategory F, the permanent extension of middle-class tax cuts, it has a whole list of them, and it lists the child tax credit as written at that time, and the education tax benefits in those at that time. Sure, it didn't foresee Congress might want to change and improve, but clearly the intent of PAGO was for permanent extension of these middle-class tax cuts to permanently extend and exempt from the PAGO baseline the child tax credit policy that was in place at the time, the education tax policy that was in place at the time.
I appreciate what you're saying. You're saying that that was our intent then, so it must be exactly the same today. It isn't the same today. Since 2011, you have battered this whole country about the fact we have deficits and the country's going down the drain and there's nothing we can do, and yet you come in here today and want to expand the debt, drive us more quickly down the drain. In 2011, that wasn't what was anticipated. We thought maybe the Bush tax would expire.
We had trillion-dollar deficits in those
years. So the
years.
fact is that you are using that legislation written by another Congress, which doesn't bind us, and now you are saying we can keep doing this. You can use that forever. That's where we are in Iraq. We gave the president an open hand, and now look where we are. And that's the reason why you have to have hearings where you discuss what you've put in place and what it really means. I yield back the balance of my time to Mr. Thompson. Thank you.
All right. Mr. Levin is recognized. And I think that's the last person with questions.
All right. Thank you, Mr. Chairman. So let me just say a few things. Mr. Barfoed, you referred to a document, I haven't seen it, where some economists came to a conclusion. I think many economists disagree with the economists that you referred to. Isn't that true, Mr. Barfoed?
I'm not quite certain of your reference, Mr. Levin. If you were talking about some of the work I mentioned, I said that some have suggested that it might be the case that some of the incidents of either benefits of spending programs or tax programs may sometimes result in higher prices charged by educational institutions or in other contexts. And I had noted that if that were the case, then that can make people, then the benefit can make certain people worse off. I was not trying to represent that that's a clearly well-known fact. I was presenting it as a possibility that the members might want to consider in their deliberations.
Well, I think some would question whether it's a well-known fact. It's a position, and it kind of reminds me of those who say don't extend unemployment insurance because as a result some people may not be inspired to go and look for work, when the overwhelming evidence is that that is not true overwhelmingly. Let me just say a word about PAGO. What the Republicans have done is to eliminate it and to say that the only thing that's subject to PAGO are spending programs, maybe, but never tax reductions. And the reference to bipartisan, I would like to just make this clear. The two of us set up working groups on a bipartisan basis, and that was a useful step. But after that, all the work that was done on tax reform was done on a strictly partisan basis. There was no consultation with us as to the overall package or its key elements. An important part of tax reform, as proposed, was that it would be revenue neutral. And this is the opposite. And indeed, as this legislation was presented here today, there wasn't bipartisan discussion as to its elements. So we started on a bipartisan basis, and then the majority threw it to the winds. And there's a reference here also to the administration budget and what it does with certain provisions. Yes, in certain cases it isn't paid for specifically, but it's part of an overall budget. An overall budget that strives to reach some kind of sanity in terms of balance. Mr. Ryan, you have a different budget proposal. You also claimed that it would be budget sound after a certain number of years. We can argue whether that's true or not. This is a path in the opposite direction. What's happened here is to take separate pieces out of a comprehensive tax reform bill proposal and bring them up totally unpaid for and in substance in forms that are not the product of hearings in this committee or further bipartisan work. I oppose, for substantive reasons that have been outlined by Mr. Doggett and others, as well as the general approach, I oppose this bill and urge that we vote.
Ms. Sanchez is recognized for 5 minutes.
Thank you, Mr. Chairman. I would just ask for unanimous consent to enter into the record 2 letters that my office received, one from the University of Southern California and the other from the University of California system, noting some of their concerns with the bill, specifically that concerns that the bill as written could exclude some low and middle income students who currently utilize the lifelong learning credit by limiting the proposed AOTC to 4 years. And that would exclude some students from low and middle income backgrounds who work full-time or have dependents or who serve in the military and typically take longer to complete a degree. So just asking for unanimous consent to enter these 2 letters into the record.
Without objection, so ordered. If there are no further questions, are there any amendments to the amendment in the nature of a substitute? If there are no amendments, the question is on the adoption of the amendment in the nature of a substitute. All those in favor signify by saying aye.
Aye.
Those opposed, no.
No.
In the opinion of the chair, the ayes have it, and the amendment in the nature of a substitute is agreed to. I will now recognize Mr. Johnson for the purpose of offering a motion.
Mr. Chairman, I move the committee favorably report H.R. 3393 as amended to the House of Representatives.
The question is on favorably reporting the bill. All those in favor signify by saying aye.
Aye.
Those opposed signify by saying no.
No.
The ayes have it. The motion is agreed to.
Mr. Chairman, I ask for a roll call vote.
The clerk will call the roll.
Mr. Johnson?
Aye.
Mr. Johnson, aye. Mr. Brady? Aye. Mr. Brady, aye. Mr. Ryan? Aye. Mr. Ryan, aye. Mr. Nunez? Aye. Mr. Nunez, aye. Mr. Teaberry? Mr. Teaberry, aye. Mr. Reichert? Mr. Reichert, aye. Mr. Bustani? Aye. Mr. Bustani, aye. Mr. Roscom? Mr. Roscom, aye. Mr. Gerlach? Mr. Gerlach, aye. Mr. Price? Aye. Mr. Price, aye. Mr. Buchanan?
Aye.
Mr. Buchanan, aye. Mr. Smith? Mr. Smith, aye. Mr. Schock? Mr. Schock, aye. Ms. Jenkins? Ms. Jenkins, aye. Mr. Paulson? Mr. Paulson, aye. Mr. Marchant? Mr. Marchant, aye. Ms. Black? Ms. Black, aye. Mr. Reed? Mr. Young? Mr. Young, aye. Mr. Kelly? Mr. Kelly, aye. Mr. Griffin? Mr. Griffin, aye. Mr. Renacci? Mr. Renacci, aye. Mr. Levin?
No.
Mr. Levin, no. Mr. Rangel? Mr. McDermott? Mr. McDermott, no. Mr. Lewis? Mr. Lewis, no. Mr. Neal? Mr. Neal, no. Mr. Becerra? Mr. Becerra, no. Mr. Doggett? Mr. Doggett, no. Mr. Thompson? Mr. Thompson, no. Mr. Larson? Mr. Larson, no. Mr. Blumenauer? Mr. Blumenauer, no. Mr. Kind? Mr. Kind, no. Mr. Pascrell? Mr. Crowley? Ms. Schwartz? Ms. Schwartz, no. Mr. Davis? Mr. Davis, no. Ms. Sanchez? Ms. Sanchez, no. Mr. Reed? Mr. Rangel? Mr. Pascrell? Mr. Crowley? Chairman Camp? Chairman Camp, aye.
The clerk will report the vote.
22 yeas, 13 nays.
There being 22 ayes and 13 noes, the motion is agreed to. H.R. 3393 as amended is ordered favorably reported to the House of Representatives. Without objection, staff is authorized to make technical and conforming changes to the bill. Without objection, members will have an additional 2 days to file with the committee clerk supplemental, additional, or minority views. So ordered. The next order of business is a bill introduced by Ms. Jenkins to ensure that the child tax credit applies more fairly to hardworking American families and better accounts for the rising costs of raising children. Ms. Jenkins, you are now recognized for an opening statement on the bill.
Thank you, Mr. Chairman, and thank you for your leadership on these important tax issues. We have a nation that's struggling to make ends meet. The families I talk to back home, whether they're at the grocery store or at church, are fed up with a new normal where Americans are paying more for everything while taking home less. Costs for everyday essentials such as gas, groceries, and electricity all continue to rise while household incomes remain stagnant. There is no need to compound these problems with a tax code that is working against families. Since being expanded to $1,000 in 2004, the child tax credit has failed to keep pace with costs. Under this bill, the amount of the child tax credit would be indexed for inflation, and the marriage penalty would be eliminated by increasing the joint filing phase-out threshold to exactly double that of single filers. This will help parents keep more of their hard-earned money to use for the mounting expenses of parenting. Indexing for inflation has become an established part of our tax system. Congress has smartly indexed similar tax credits to inflation, including the adoption tax credit, the earned income tax credit, and education tax credits. Increasing the phase-out level is a family-friendly change that greatly simplifies the tax code for middle-class parents currently forced to perform a complicated computation and increases fairness across the code. This is a sensible piece of legislation that will help hardworking families keep more of their paychecks and help pay for the rising costs of raising a family. Mr. Chairman, I thank you for allowing this bill to be brought forward today, and I would yield back.
Thank you. Mr. Levin, you're recognized for an opening statement.
Thank you, Mr. Chairman. I basically covered this in my opening statement, so I will not have a further opening statement. We'll have some further discussion. You know, I read an article yesterday in the paper about the effort of Republicans to try to cover their tracks when it comes to the impact of their budget and their programs on children and families. And I think this is clearly a political effort. I'll yield back and we'll raise these questions later.
The committee will now proceed to consideration of H.R. 4935, which was distributed in advance. Without objection, the bill will be considered as read and open for amendment at any point. I offer an amendment in the nature of a substitute, which was distributed in advance along with a green sheet explaining it. Without objection, the amendment in the nature of a substitute shall be considered as read, open for amendment at any point, and considered base text for purpose of amendment. Again, I'll turn to Mr. Barthold to provide the technical description of the amendment in the nature of a substitute, and I would ask that members hold their questions until after he has completed his presentation. Mr. Barthold.
Thank you, Mr. Chairman. Mr. Levin, Members have before them two joint committee documents, JCX 72, which describes the underlying legislation, HR 4935, and JCX 74, which briefly describes the chairman's amendment, the nature of a substitute. To quickly summarize what this legislation does, it would index the $1,000 value of the present law child tax credit. It would increase the the beginning of the phase-out range for joint filers to $150,000. That is double that of unmarried filers. And lastly, the legislation would also index the phase-out ranges for future inflation. That concludes the description of this legislation, and I'm happy to answer questions, Mr. Chairman.
Thank you. Are there any questions for Mr. Barthold? Ms. Schwartz.
Thank you, and thank you for the opportunity to discuss the legislation before us. I think many of us are very supportive of the child tax credit and do want to see it extended. However, this Republican approach, I have a couple questions about it, because it's, while many of us might be interested in extending the amount from $110,000 top endpoint for eligibility to $150,000, it does so in a way that potentially provides, well, actually, clearly hurts the lowest income working Americans, the hard-working Americans who will no longer be eligible for this tax credit, for this child tax credit. So while we might want to help wealthier families, to do it at the expense of potentially millions of children in this country is really one that I'm really deeply concerned about. And I don't know whether the rest of the committee is aware of exactly what will happen here. And I wanted to ask Mr. Barthold to explain this in a very clear way. So I wanted to ask a series of questions, if I may, to make sure that it is clear what we're doing here. First, let me just ask about a single mother with two children who makes minimum wage, which is $7.25 an hour, and works 40 hours a week, say 50 weeks a year, earns $14,500. That's pretty clear. Under current law, how much would this mother receive in the child tax credit?
The maximum amount, $2,000, Ms. Schwartz.
Yeah, actually, currently there's a $3,000 income threshold, so the first $3,000 of income doesn't count, as I understand it. So it's only above that. So it's really $1,725.
But you had her earning over $14,000. You had her earning over $14,000.
By $500. All right, so essentially it's about right. It's somewhere, I had 1725, you have 2,000. I'll accept that, that's great. Under this Republican proposal, what would that same mother of two children earning minimum wage, which of course we know the Republicans are clearly opposed to increasing the minimum wage, and as the public may or may not know, the minimum wage is not indexed to inflation, but this threshold now will be indexed to inflation. Could you say what, under the Republican proposal, a hardworking mother of two children who works 40 hours a week, making the minimum wage, which the Republicans think is adequate, $7.25, what would happen to that mother under this change in law?
Ms. Schwartz, I think you're asking about the earned income formula, and this the $3,000 amount that's applicable through 2017, and this legislation does not change.
So there's no.
So there'd be no effect relative.
So there's no threshold of $10,000 here.
Well, the $10,000 threshold that you
so let's just go with the
is part of present law, and that begins 2018 and beyond.
Right. So in
and
2018,
again, this legislation does not address those thresholds.
But right, so it allows that in 2018, that $10,000 threshold to go into effect.
That's correct, and that threshold is indexed, and so we would project that would be higher than $10,000 by the time we get to.
Exactly, it would probably be maybe about 15,000 by 15,000 by 2018. Just if you look at what inflation might be anticipated to be. correct?
Perhaps. I'd
Perhaps.
have to check.
Well, it's kind of an estimate. It could be higher, but, so that means that this mother whose minimum wage could well be the same because it's not indexed for inflation would no longer be eligible for the child tax credit. If these numbers are correct,
That would be
that's
correct under the facts as you laid them out.
So, and just, I want to be careful about my time. So just to make absolutely clear, a hardworking mother making minimum wage, which the Republicans think is perfectly adequate, will no longer be eligible in 2018 for child tax credit. So according to the Republican proposal, they think that hardworking Americans who make the minimum wage do not deserve a child tax credit, but those who are making above $110,000, maybe going to $150,000 under this proposal, will then be able to get a child tax credit, potentially up to $2,000 for 2 children.
If I could just clarify, Ms. Schwartz, and not to comment on the point that you made, but for the other members, the threshold points, remember, relate to the extent to which the credit is refundable. And as you laid out the particular facts that you were describing, it sounded as though the taxpayer would have no tax liability, and so the ability to take the child tax credit would be determined totally by its ability to claim the refundable portion of the child.
But that is possible that that family, that mother of 2,
Time has
making
expired.
minimum wage, would not be no longer. I don't know if that was the intention, but that is the
All
result.
right. I do think, to clarify, Mr. Barthold, that indexing the credit to inflation is beneficial for low-income taxpayers. Is that correct?
It's beneficial for all taxpayers, Mr. Chairman.
All right. Thank you. I think Mr. Doggett is next.
Yes, Mr. Chairman, thank you. And just continuing on the points that Ms. Schwartz was making, I believe that the title of an article yesterday from the Center for Budget and Public Policy Priorities, Mr. Chuck Marr, really summarizes what's wrong with this bill. It says, latest House tax bill prioritizes credit for affluent over working poor families. And it pointed out, as Ms. Schwartz tried to do, that the credit is expanded so that some families with incomes over $200,000 get some benefits from the credit under the legislation. A family making $150,000 a year would receive a new tax cut that they do not get under current law of $2,200 in 2018. But at the same time, a single mother with 2 children who works full-time throughout the year at the minimum wage and earns $14,500 would lose $1,725. I think that's why the National Education Association, in a communication to this committee today, says, quote, this bill is just the opposite of what's needed. It would provide new permanent tax cuts to many families who have incomes too high to qualify for the credit under current law, while letting the credit disappear altogether for many of the nation's poorest working families after 2017, thereby casting millions deeper into poverty. And indeed, the Center on Budget and Policy Priorities has estimated that without an extension of the 2009 improvements, about 10 million more people will fall into poverty, will be denied the benefits of this credit beginning in 2017. There is, in addition to the inequities in the bill itself, there is an additional reason to be concerned about this credit as a part of this package. It's a little over $100 billion in additional debt as proposed by Republicans today. But to get that credit, you have to buy into a package of new borrowing, new public debt that approaches $1 trillion and probably will exceed $1 trillion eventually. That means that this action is just another entry in the ledger of accounts payable for American taxpayers. Now, yesterday, I participated with a number of child advocacy groups. First Focus led the way as they released a children's budget for the year. It found that spending on children is falling 60% faster than overall federal spending. Their analysis shows that children are the losers in the federal budget battle because their voices are hardly the loudest. What we have proposed in this package of budget bills, most of which are designed to help business, is a death by $1 trillion cuts, a debt by $1 trillion coming out of this package. And while groups like First Focus, who so effectively have presented their children's budget for the last several years to try to draw our attention to the challenges that our youngest Americans face, are concerned about the child tax credit and its accessibility, they're also concerned about Head Start, about funding for public education, especially Title I funding, about child abuse prevention, which has been the subject of attention in our Human Resources Subcommittee in this committee, about adoption assistance, about the reauthorization of the Children's Health Insurance Program, which expires next year, about the reauthorization of the Family Nurse Visiting Program that is so important to young children, about access to a wide range of education and health programs for our children. And if you add $1 trillion to the debt, the same kind of growth in the debt that was used as an excuse to have across-the-board cuts in education and in health care and other types of social services programs last year, one can be sure that next year those programs will feel the brunt of the cuts. We know already that the House Study Committee, a Republican study committee, has characterized Pell Grants and school lunch, all of Children's Health Insurance Program, they've characterized all of them as welfare. That's how they view these vital investments in the future of America. And those programs will be on the chopping block to vote for a series of bills that adds $1 trillion in debt, in bills that will be due to finance additional tax breaks in order to get one small part that has some benefit would be a serious mistake. I think what we're doing is reducing America's competitiveness in the future because we're not investing in our children, and this is not the way to do it. I yield back.
All right. Mr. Brady.
Mr. Doggett is right. If we pass this bill to help families raise their children, the world as we know it will end. Cats and dogs living together, all sorts of horrible things. Truth is, this bill has long been bipartisan. Helping families raise, it's expensive. It is just expensive to raise children. And both parties have always agreed to that. Today, we seek to index it for inflation, so as food and gasoline and utilities and all that increase, you know, the child tax credit increases. We think that's important. We also expand it to make sure you're not penalized if you're married, which we think is important. Today, this tax credit starts to phase out when you've got two teachers working and together earn more than $110,000. We say, as a nation, you're too wealthy, you don't really deserve the full child tax credit. Well, under this legislation, we say that's not the case. We know it's expensive. If you're a small business person and married to a teacher or just two families working to make ends meet, we think you ought to be treated equally under the law, and that's what this bill does. The truth is there are no substantive arguments against this bill, none, just politics. What we've heard today is we need more hearings because we don't understand how the child tax credit works. Well, if that's the case, you don't belong on this committee. Secondly, we've heard it isn't bipartisan, but in truth, this has always been bipartisan. Republicans and Democrats together have always believed in helping people raise their children. This furthers that goal. And finally, this new deficit argument, look, this has never been paid for before by our Democrat friends. It wasn't in the president's budget or in stimulus. The first year Democrats took control of Congress, they doubled the debt. The second year, they tripled it. Then 4 years of trillion-dollar debts. Only when the American public rejected that, put Republicans in charge of the House, we've begun to get the debt down. We know these provisions are permanent. We know they're important to families. It really is time. We know it's election year.
Would the gentleman
So
yield?
we know we're going to hear this. Not at this time. We know we're going to hear all this stuff, but the truth of the matter is this is bipartisan legislation that we can all support and we all ought to get behind. Now I yield. Yes, sir.
Did you suggest, Mr. Brady, that the debt started with the Democratic?
Oh, no, I said Democrats in Congress doubled the deficit in the first year, tripled it in the second, and then went quickly to trillion-dollar deficits
And you would,
4 years.
maybe for clarification, you would argue then the $2.3 trillion worth of tax cuts and two wars had nothing to do with the size of the debt?
You know,
and the collapse of financial
considering
markets
President
everywhere?
Obama continued those policies, and signed into law the permanence of those
Continued
tax
whose
cuts,
policies?
I would say yeah.
Continued whose policies?
Since President Obama continued the policies of not paying for the war
What
and making permanent the tax cuts,
whose policy would that be, Mr. Brady?
President
Was
Bush,
there somebody? Oh, thank you.
yes, continued by President Obama.
All right. Mr. Crowley.
I'm a bit puzzled by that, but be that as it may, thank you, Mr. Chairman. My Republican colleagues love to quote their old friend, our former President Ronald Reagan, and talk about lower taxes. But that only paints part of the picture of the legacy of the Gipper. The other side was the fiscal irresponsibility of those tax cuts that blew a hole in our nation's budget that we as a country are still paying off. And today, there they go again. My colleagues in the majority are continuing this dangerous and irresponsible path of passing massive tax cuts that will add to our nation's credit card bill without any concern for the future of our country. Yes, so far in the past few weeks, this committee has passed, as my colleague from Texas has already mentioned, almost $1 trillion in tax cuts, all of which will be added to the bill to be paid not by us in this room, but by our children and our grandchildren. It was President Clinton that finally ended this reckless tax and spend policy. President Clinton enacted policies that created budget surpluses and actually started to pay down Reagan's debts. Of course, this plan of using Americans' tax dollars to invest in America ended just months into the term of President George Bush, and this gets to the point that I think my good friend from Texas, Mr. Brady, was talking about. President Bush, who squandered the trillions of dollars in national savings that President Clinton left him to cut taxes. The result, an economy that was worse since the Great Depression and annual deficits that topped $1 trillion. Now, after a decade of massive budget deficits, President Obama has finally cut the nation's annual deficit in half from the $1 trillion deficit he inherited. The deficit is still too high, but the nation's credit card debt is decreasing at a rapid and record pace. But my colleagues on the other side don't learn. They want to rack up that credit card bill once again. My colleague, Mr. Ryan, and the chairman have stated that the tax cuts being debated today are exempt from PAYGO and therefore do not need to be offset. My question to you, Mr. Bartold, is this. Regardless of whether these bills meet PAYGO rules or not, if we enact these bills into law as they now stand, will they result in an increase in our nation's debt by $210 billion, or our nation's deficit in our debt by $210 billion?
Mr. Crowley, as I reported, our documents provide the staff's revenue estimates. The legislation before you
it's a simple question, though. Just a yes or no. Will it add to the nation's debt and to our deficit this year?
If unoffset, that's a 10-year number, the $210 billion.
And yes, it will add?
Yes.
Yes, it will. Thank you,
It's
Mr.
a
Bartold,
10-year.
for your honesty and your straightforwardness. I appreciate that. So these are budget buster bills, no matter how the majority wants to describe or portray these bills. They will add to the deficit by $210 billion. So let's oppose these budget busters and focus on real tax reform that doesn't add to the deficit but fosters economic growth and leaves a better America for our children and our grandchildren. I only wish my Republican colleagues had a plan to accomplish that goal. And with that, I yield back the balance of my time.
Thank you. Mr. Becerra.
Thank you, Mr. Chairman. Mr. Bartold, thank you very much. Let me get back to this issue of what the impact of this change in law would be. Under current law, families, working families can receive actually all families that have children can receive this credit for having children to help them cover their costs. This would expand that credit to wealthier families at a cost to the Treasury, which would have to be borne by the taxpayers. What is the 10-year window cost of this bill?
Mr. Becerra, as we report on JCX 74, the revenue loss over the budget period is $114.9 billion.
$114.9 billion. And as has been pointed out by other members in their questioning, it appears that while we are expanding the ability for some families to use this child tax credit, we're actually going to see this legislation eliminate the ability of some families that have children from using this tax credit at the same time. Is that correct?
As I noted, all families can benefit from the indexing of the $1,000 amount. The effect that Ms. Schwartz, I believe, was highlighting was that under present law, and this is an aspect which is not modified by the legislation, there is an earned income test, and that the credit, the present law credit, is refundable only to the extent of 15% above a threshold level.
And
for the next few years, the threshold level is $3,000.
I got it.
Thereafter, it jumps up to a $10,000 level, but that $10,000 is indexed going back to 2001.
So to make sure we understand what you just said.
But there's no change.
But to make sure we understand what you just said, with this legislation, what we currently have as law will in the future change so that there will be some families that currently qualify for the tax credit for their children who will no longer qualify if this bill becomes law.
Under present law, there are some families that qualify that because of the change in the earned income threshold beginning in 2018.
Okay, let me try to
qualify.
I think the point is when you said with this law, because this law does not address that issue.
It doesn't change.
Let me try to rephrase the question, see if I can get a more concise answer from you. If this bill were to become law, it would change what the trajectory is if current law were to remain in place over that same span of time. So let's say current law were to move forward forever. The current law we have, as it stands, for families who make a deduction for a child tax credit. If this bill were to become law, the changes it makes would change what the current status of the law is for certain families who claim the child tax credit.
Look,
I think that's
could
actually
help.
not quite. Present law, the point that
Mr. Bartow, I'm not asking for an explanation. If you can't answer the question, and I appreciate it if I haven't phrased it in a way that you could answer it, I could appreciate that. And I don't want you to try to give an answer that would be deceptive in your opinion. Please, if you didn't understand the question.
I was just trying to, I guess I did not make clear for
no, but
present law.
Mr. Bartow, I don't need you to try to clarify. I just need you to try to answer the question. If you can't answer it, you could just say, I can't answer it.
Well, I think the problem is with the premise of your question.
Mr. Chairman, I understand. And if he can't answer based on the premise of the question,
this bill doesn't change current law.
Yeah, he could say he can't answer. I'm just trying to see if Mr. Bartow is willing to answer that question.
Yeah, I don't think I can really answer it without giving a little more explanation.
So let me then just get to the point I'm trying to make, which I think Ms. Schwartz was trying to make and others are trying to make. We will expand this tax credit under this bill, should it become law, to families who make over $150,000. We will deprive families that are making less than $15,000 the opportunity to have the same child tax credit. All along, while we're providing this to some families that are making more money, we're taking it away from some families that make less money. But the big kicker for me is that even if you take it from those that are modest income earning families and let higher income families have it, you still have a deficit, as you just mentioned to us, that grows $114 billion because it's not paid for. That, I think, should be a concern to any working family that wants to have fairness across the board to all who have kids. I yield back.
Yes, time has expired. I have Mr. Pasquale next.
Mr. Bullthorn, and I'm sorry I have to talk through this gentleman. I have a table in my hand from my friend, who I respect, the chairman of the Budget Committee, his fiscal year 2015, which every member of this committee has, I would assume. In this column, the column which is labeled 2024, Mr. Ryan projects that the Republican budget will lead to a $5 billion surplus, and that shows in the table itself.
Will the gentleman suspend?
Sure.
The paper that you're referring to has not been distributed to the members of the committee. You mentioned everyone has it. I'm not sure what you're referring to, the table.
It's from the budget.
Can you have a copy made so that we can take a
I'll
look?
show it to you.
Yeah. Well, thank you. Yeah, thank you. It's our table. All right, thank you.
We have no secrets
House
there,
Budget Committee.
Chairman. Anyway.
Thank you.
Mr. Barthard, $5 billion surplus. Mr. Barthard, according to your estimates, not mine, not Mr. Ryan's, not Mr. Neal's, yours, how much revenue did the bills before us this morning lose in the year 2024? That is the ALTC, that's, I think, 17.1 billion, I think. And the child care credit. How much does that add up to that we lose in 2024?
Mr. Pasquale, our estimate for the budgetary effect of the education credit legislation that was just reported by the committee was a revenue loss of $17.1 billion for federal fiscal
And what about the CTC?
2024. And for the child tax credit legislation that you are considering right now for fiscal year 2024, we estimate a budgetary loss of $20 billion, 20.0.
So, if these bills are enacted into law, we will lose an additional, Mr. Chairman, $37.1 billion in revenue in the year the Republican budget projects a $5 billion surplus. It's your own numbers. Take a look at them. So does the majority's budget still balance in 10 years in that case, Mr. Barthard? Barthold?
Barthold. You know, that's fine.
Tom Barthold.
No, Mr. Pasquale, I'm not familiar with the details. I shouldn't comment.
You're
on
not
it.
familiar with the budget?
I'm not familiar with Mr. Ryan, all the details of Mr. Ryan's budget proposals. So I don't think I'm the appropriate person to make that comparison.
Well, if you look at the chart and you look at what we're going to do today, it doesn't balance. Mr. Chairman, when these bills pass, your party will have voted to add over $85 billion to the deficit in the only year your budget balances. And you want us to believe you? So I don't want to hear any more from my friends about how the Republican budget is the only budget that actually balances. Mr. Ryan said earlier that this bill complies with statutory pay-go. Let's go to what my good friend from New York, Mr. Crowley, said. But at the end of the day, all that matters is dollars and cents. How much revenue will we collect if these bills are law, and how much if they aren't? That's what it comes down to. And by that measure, these bills unquestionably add to our debt and throw your entire budget off. From the same group of people who warned us that this is the center of national security now. The debt and the deficit are the very heart of national security in the United States. How does that measure up to what the budget actually says and what you're doing here today? I find it hard to believe you. I am not calling you a liar, but I find this hard to believe. Very good, Mr. Ryan. Thank you, Mr. Chairman. I yield back.
Thank you. Mr. Ryan's recognized.
All right, I guess I'll take my 5 minutes. Let me see if I can try and bring this up a level and shed a little light. When we write baselines, and we can go on and on about baselines. When we write baselines, whether we're Republicans or Democrats, we try to put in those baselines the policies that we prefer and the way we think we ought to go forward. And when the Democrats wrote the PAYGO baseline, the PAYGO law, they said, well, there are certain policies that we think ought to be permanent, even if they're not. And therefore, if we ever make them permanent, it's not going to count against PAYGO. And among those policies were the child tax credit, these education benefits. And there are others in here as well. When Republicans wrote CUTGO, same thinking went into it. Same with the budget that we write. Same thinking goes into it. There are certain things in tax law that we think are good, that we always extend, and that we ought to just extend them. And I think the thinking with the Democrats in 2010 was the same. We shouldn't have to raise taxes on families to keep them where they are right now. Meaning, if you're getting this tax benefit for raising children, for saving for college, you should just get it. And to keep getting what you've got, we shouldn't have to raise taxes in other places. Our thinking on that is that's going to do damage to the economy. So we shouldn't have to raise taxes to keep them where they are, is basically what we've said. Now, the other issue when it comes to baselines, and this is where we may have a difference, is we think having an escalator of higher taxes and higher tax rates is going to do damage to our economy. So among the things that we think are central toward balancing the budget and paying down the debt is economic growth, faster economic growth. And the culprit here has not been revenues. Yes, when you have a recession, revenues go down, but when you have economic growth, revenues go up. We can go back and relitigate the 80s and all the past, but the point is we've really not had a revenue problem. We've had a spending problem, a big spending problem. That is where we want to put the baseline emphasis. That's where we want the budgetary rules to put controls, because it is spending that on average has risen so much faster than revenues, and we don't want to get ourselves in a situation where we keep chasing higher spending with higher revenues, because we'll hurt the economy. And so when we write our budget enforcement rules, we differ with the other side of the aisle on that point, which is let's not have a system that encourages higher and higher and higher taxes. Let's keep the focus on spending. But to a bipartisan concern, we have said there are certain things in the code that ought to just be permanent. Child tax credit, no, I'm not going to yield, education expenses. And that's the point I'm trying to make is when we talk about PAYGO, it's pretty clear in the PAYGO law, you intended these things to be permanent, just like we did with CUTGO. It's called the Black-Davis bill, the education bill. These are bipartisan bills. This shouldn't be a huge cause for partisanship. That's the point that we're trying to make here. And so going forward in the budget, yes, we're probably tougher on spending. We think spending is more the culprit. We think if we just keep chasing higher tax revenues, we'll do damage to the economy. But we both agree that these are good policies that we ought to keep in place, that we shouldn't take away.
The gentleman yield for 1 point.
I'm not going to yield. Our only point is let's not take tax dollars out of the right pocket of a taxpayer just to give to their left. Let's keep them where they are. And that's basically why we have the rules we have today. Now, with respect to our budgets have always tried to predict the kinds of policies we want to have in the future, meaning not raise taxes. And that's what our budget resolution does. I stand behind it. The point I would make is we think these things should be permanent. We think it's good policy. On these things, we pretty much agree. You try to capture that in PAYGO, and we're basically doing that here. That's the point.
Mr. Chairman?
I have Mr. Levin next. Does someone else, do you want to go now, or do you want me to go to Ms., I think Mr. Neal.
Mr. Chairman, thank you. Mr. Ryan, I don't think anybody's talking about relitigating the 80s, but I do think that we could sensibly relitigate 2001 and 2003 with those tax cuts that took place over 10 years. And not to miss the very salient point, you argued a moment ago in your thesis that the idea of cutting taxes was to promote economic growth. It was the slowest economic growth since Herbert Hoover had been president. The facts don't square with the speechifying. And my point is that it blew a hole in the deficits, and I would suggest this to you. There was enough money in 2001 and 2003 to do some modest tax cuts for middle-income people, and I would have supported it. What happened was, on a distributional note, those tax cuts overwhelmingly went to people at the top. And the argument that was popular that everybody got a tax cut, the people at the bottom could have spent their tax cut in 1 week of increased grocery prices. That was the problem with the distributional notion. So if the gentleman's prepared to relitigate that period of 2001 and 2008 and compare and contrast it, what had happened through the Clinton years, and with great credit, incidentally, to George Bush Sr. for a budget that almost cost him his job. That perhaps probably did cost him. Well, but there were a series of other issues that played into it. But not to miss the point, that he moved away from ideology and addressed the budget deficits and didn't try to suggest that in 2001 and 2003 you could cut taxes to the extent that America did and that it would promote economic growth, because it didn't.
Gentlemen, yield. Look, we don't need to get back and forth. We can look at revenue baselines. We can look at revenue growth prior to the Great Recession.
We can look at ideology.
You throw the recession in there, absolutely, it throws your numbers off because millions of people lost their jobs. The point I guess I'm trying to make is both of our parties have said these tax benefits for children, for education, we like them, we're going to keep them, we might as well make them permanent. And on both sides of our measuring sticks, whether it's cut-go or pay-go, or our budget resolution, we've all said, let's just keep them permanent and not raise taxes elsewhere to do that. That's the point I'm trying to make.
Will the gentleman yield from Massachusetts?
The gentleman from Massachusetts has a time.
Yeah.
Mr. Neal has a time.
Yes.
Yield for a point. To my friend from Wisconsin, I think you're a little bit overstating the case as far as the 2010 pay-go rule. That rule expired in 2011, recognizing the temporary nature of extending current policy until we can find a permanent fix that we can offset and pay for. Not a permanent fix that will cost the Treasury $115 billion over the next 10 years, which is what's being proposed to us today.
We have statutory pay-go on the books right now.
Well, you have a different cut-go rule, and under your own budget resolution,
One's
calling
law,
for
one's
offsets
rule.
with any permanent changes to the tax code. So even you, to your credit, in your budget resolution, recognized that there should be offsets to pay for permanent changes in the tax code. So you keep hearkening back to 2010 and our pay-go, and somehow there was bipartisan agreement to permanently change this without pay-fors. I think it's misinterpreting what the intent was with that 2010
I respectfully
law.
disagree.
And, the bottom line is, unless we figure out a way to pay for this, this is going to be paid in some other fashion. My concern is going to be increased borrowing from China in order to do what we're doing today.
Yeah, I'm going to yield the last of my 10 minutes through the 5-minute rule to Ms. Schwartz.
Yeah, just a couple of points. I think that it clearly, I also agree that Mr. Ryan is overstating the case here. Well, yes, we would agree that there are critically important tax provisions that help middle class and working families. What Mr. Ryan is saying is that there is no tax cut that he wouldn't think is just great, and would not examine any one of them as to whether they in fact do stimulate the economy or keep the lead to economic growth. That has been your case, that none of it, all of it leads to economic growth. All of it, when we've argued that in fact there are tax provisions to some of the biggest corporations that actually should expire because they're no longer helpful to growing the economy, that in fact we ought to look at them because they are reducing revenues that could be and should be used to meet important obligations that we have in this country.
Don't need to get into it, but
including the child care.
I would just say the gentlelady is misstating my
I have not
position.
yielded, excuse me.
The gentlelady is
Excuse
misstating
me,
my
I have
position.
not yielded. So let me just also say that this piece of legislation that we have before us is not just continuing a child tax credit. It is actually expanding it quite a bit on paid for. So it will reduce revenues, and, well, even if we agreed it might be helpful, it is not just as simple as
Mr. Neal's time has finally expired.
Mr. Chairman.
No, I do want to say that I think the point that's being made is that these have been long bipartisan measures. They've had support from both sides, support to make them permanent from both sides, and not just in the 2010 pay-go law, but also in the president's current budget. He makes these permanent. He doesn't quote-unquote pay for them. So, what I think the point is that this has been something that has long had support. My question for Mr. Barthold, though, is Without indexing this credit for inflation, it's been eroding every year. Is that correct, as inflation goes up?
That's certainly the case, Mr. Chairman.
And because current law does not index it for inflation, that actually makes the credit less available. It actually diminishes the credit for taxpayers, for families, for parents.
It diminishes the purchasing power that the credit represents.
And so what we're trying to do here is actually index it for inflation so that we can keep, as some other members have said, so we can keep people where they are. So at least families can have a chance to keep pace with the rising costs of all the expenses that families face, whether it's tuition or school supplies or food or gas, all of those things. Is that correct?
The indexing is geared off the consumer price index, yes.
All right, thank you. I have Mr. Levin as the only person seeking time right now. Mr. Levin.
I want to speak to the claim that you're making this tax credit permanent. Before I do that, I think Paul or Mr. Ryan, Mr. Chairman, you have kind of exposed what may be really trying to happen here, and that is to affect the baseline. To affect the baseline. There is some thought that what the Republicans have in mind is to squeeze as much as they can into the baseline so that when they address tax reform, it's a different baseline. The problem with that is I don't think it will happen, and it doesn't take into regard the impact on the deficit of this country. In that case, trying to fool with the baseline is irresponsible in terms of sound budget procedures for this country. But now I want to say a word about making this permanent. It's interesting, the American Opportunity Tax Credit permanent, and everything else you've done up to date is permanent, except the improvement in the child tax credit in the Recovery Act. That you do not make permanent when you make permanent the child tax credit. So after 17, and this is, Mr. Bartow, what we're trying to get at, there will be a major impact on low and low-middle income families. And why don't you make the 09 improvements permanent? And I just want to read to you the impact of this projected in terms of veterans. I just want to read this. And this comes from the Center for Budget and Policy Priorities. An estimated 400,000 veterans and armed forces families in 2018 would benefit from extending the ARRA improvements in the child tax credit. If you want bipartisanship, sit down and talk with us before you bring up legislation. And we would have told you point blank that what we put into legislation in 09 in terms of the child tax credit should continue. You're making this permanent without it. And so you're saying essentially to future legislatures, you will have to, on your own, put back what has expired. And if you had asked us, would we support legislation without this, without continuing the Recovery Act improvements that affect, what was the number given? Millions of people, millions. Mr. Bartow, you're kind of put on the spot because you know what people are after. So the simple question was, are the improvements in the 09 Recovery Act for the child tax credit included in this legislation? And I think you've already answered it. The answer to that is no.
This legislation does not change the earned income threshold.
It does not continue the Recovery Act improvements of '09.
As I pointed out, after 2017, the threshold amount increases.
Oh, okay. All right. Have it your way. I mean, I very much respect you. I think you think it's a bit of a delicate subject, but it's really very plain.
Well, he's just trying to be precise, but, all right, thank you. I think time has expired. Are there any, if there are no further questions, are there any amendments are there any amendments to the amendment in the nature of a substitute? If there are no amendments, the question is on the adoption of the amendment in the nature of a substitute. All those in favor signify by saying aye.
Aye.
Those opposed, no. In the opinion of the chair, the ayes have it, and the amendment in the nature of a substitute is agreed to. I will now recognize Mr. Johnson for the purpose of offering a motion.
Mr. Chairman, I move that the committee favorably report H.R. 4935 as amended to the House of Representatives.
The question is on favorably reporting the bill. All those in favor signify by saying aye.
Aye.
Those opposed signify by saying no. No. The ayes have it. The motion is agreed to.
Mr. Chairman, may we have recorded vote?
The clerk will call the roll.
Mr. Johnson.
Aye.
Mr. Johnson, aye. Mr. Brady. Mr. Brady, aye. Mr. Ryan. Mr. Ryan, aye. Mr. Nunez. Mr. Nunez, aye. Mr. Teaberry. Mr. Teaberry, aye. Mr. Reichert. Mr. Reichert, aye. Mr. Bustani. Mr. Bustani, aye. Mr. Roscom. Mr. Roscom, aye. Mr. Gerlach. Mr. Gerlach, aye. Mr. Price. Mr. Price, aye. Mr. Buchanan. Aye. Mr. Buchanan, aye. Mr. Smith. Mr. Smith, aye. Mr. Schock. Mr. Schock, aye. Ms. Jenkins. Ms. Jenkins, aye. Mr. Paulson. Mr. Paulson, aye. Mr. Marchant. Mr. Marchant, aye. Ms. Black. Ms. Black, aye. Mr. Reed. Mr. Young. Aye. Mr. Young, aye. Mr. Kelly. Aye. Mr. Kelly, aye. Mr. Griffin. Mr. Griffin, aye. Mr. Renacci. Mr. Renacci, aye. Mr. Levin. Mr. Levin, no. Mr. Rangel. Mr. McDermott. Mr. Lewis. Mr. Lewis, no. Mr. Neal. Mr. Neal, no. Mr. Becerra. Mr. Becerra, no. Mr. Doggett. Mr. Doggett, no. Mr. Thompson. Mr. Thompson, no. Mr. Larson. Mr. Larson, no. Mr. Blumenauer. Mr. Blumenauer, no. Mr. Kind. Mr. Kind, no. Mr. Pascrell. Mr. Pascrell, no. Mr. Crowley.
No on this bill, and I would have voted no on the first one as well.
Mr. Crowley, no. Ms. Schwartz. Ms. Schwartz, no. Mr. Davis. Mr. Davis, no. Ms. Sanchez. Ms. Sanchez, no. Mr. Reed. Mr. Rangel. Mr. McDermott. Mr. McDermott, no. Chairman Camp. Chairman Camp, aye.
The clerk will report the vote.
22 yeas, 15 nays.
There being 22 ayes and 15 noes, the motion is agreed to. H.R. 4935 as amended is ordered favorably reported to the House of Representatives. Without objection, staff is authorized to make technical and conforming changes to the bill. Without objection, members will have an additional 2 days to file with the committee clerk supplemental, additional, or minority views so ordered. There being no further business before the committee stands adjourned. Good job.